You would have heard about mango tree, banyan tree, banana tree, neem tree, and even you would have heard about the so-called money plant. Little bit confused why I am talking about these trees. Is it related to investment? Yes, of course, it is related to investment. Hello guys, you're watching Finance Lens and I am Vikas. So now let's start off with our video. What is the function of a tree? The function of a tree is from a small seeds it grow to a huge plant. Same way the investment also is related in the same manner. From beginners we by continuously investing we earn a handful bag of money. So by continuously investing in the stock market we would earn a lot of profit as then expected. How the money tree is related to the investment mechanism that functions in the stock market. So the money tree mostly stands for the three golden words that is available in the stock market. That is IPO. The full form of IPO is initial public offer. So what is an IPO? So today video will be mostly about a question and answer round, as clearing the concept of an IPO, how an IPO function in a stock market, and how is it relevant for earning a good profit and handsome bag of money by investing a small amount of investment. So we start off with the first question, that is, what is an IPO? So the IPO is the process of initial public offer, transfer a privately held company into a public company. This process also create an opportunity for a smart investor to earn a handsome return on their investment. So what is an IPO? So IPO is mostly when the privately held company wants to raise money from the public and wants to gain the name of public limited company. It raise an offer that is called an initial public offer. Initial means it's for the first time it is raising money from the public. Before raising the IPO it was privately held company, but now after raising it will be taking the money from the public, so it is publicly held company. The second paragraph says that this process also create an opportunity. Here is our most important points for us to create an opportunity for smart investors to earn a handsome return on investment. So in IPO by investing we can earn a lot of profit compared to investing in regular. How the price of an IPO is decided? So there are two types of prices at which the IPO is raised. The first one is fixed price IPO. So what is a fixed price IPO? Fixed price IPO is the IPO for which the price is fixed by the company and we bid on a single price. There will be only one price we have to bid, the price which is fixed by the company. So then this is not actually most of the company doesn't raise the money by issuing fixed price IPO. They raise it by the book building process, that is book building offering. In case of book building, what is a book building? In case of book building, the company initiating an IPO offer 20% price band on the stock to the investors. Interested investors bid on the share before the final price is decided. So the final price is not decided in the book building process. There is a range. Like for example, there will be a range from buying from 20 rupees to 30 rupees. In that range we need to bid how much price we are offering for the shares which is offered as an IPO. So it's depend on the investor's choice, how much they want to bid. They can bid for 25, 26 depending on your wish. So book building process doesn't have a fixed price. The difference between these two, there doesn't have a fixed price. The mere difference is that the price is set in a range of 20% price band. So there will be 20% price band maximum difference. Interested in, okay, the next points come to the lowest, the book building process. The lowest price which I just give you an example of 20 and 30. The lowest price is called a floor price, that is 20 rupees will be called a floor price for example, and the highest price is, that is 30 rupees, will be called a cap price. That is cap price, that is the highest price. And the shares at which the company will be offering is known as a cut-off price. That depend on the company, and many other legal requirement at which price they are issuing the shares. So the price at which the shares will be issued is known as cut-off price. So the next question is number 3. What is the eligibility norms for an individual investors like us to apply for an IPO? For that, there is only simple 3 points that we need to take into consideration. That is, it requires an investor interested who is interested in buying the shares should have a PAN card issued by the Income Tax Authority of India. Like if you're buying the shares or in India, so you should have a PAN card registered in the Income Tax Department of the country. You also, and the second point is that you also need to have a demat account. So demat account, demat account is same as a which is used for buying and selling the shares. So the third point come out. The third point is a little technical. So just check it out. It is not required to have a trading account. However, in case the investors sell the shares on the sticker, it will need to have a trading account. So when you are buying the shares, we need to have a demat account. But when we are trying to sell the shares, when we are trying to sell the shares in the open market, we need to have a trading account. Trading and demat account. The difference between trading and demat account is given here. So the shares which are sold, and what is the difference between demat account and trading account? So there are two difference points between demat account and trading account. The demat account and trading account are not the same. They are little different. Just check it out. The shares which are bought and sold are always stored in dematerialized form in demat account. The shares which are bought and which are sold or brought are stored in a dematerialized account in a demat account. And what is a trading account? The shares which are held in demat account, which we can sell in future. So for that we need to a trading account. So demat account is mostly an account which is open but not used for trading. But trading account is an active account which is used for trading and buying and selling the share. That is regularly the trading happen on that share. So for selling an IPO, we need to have a trading account. That is an active account for selling the shares in the open market. Why the company come up with an IPO? There could be a bundle of reasons that the company come up with the IPO, but I have taken into some points into consideration why the company mostly come up with an IPO. So we should so let's start off with first point, that is funding the general corporate purpose. The company may need fund for investing for business purpose, that is working capital requirement, meeting the day-to-day expenses. For that reason they can issue an IPO. Second reason why an IPO, it gives an visibility and credibility. Compared to privately held company, public limited company gain more visibility and credibility. Credibility means the company can grant a loan from the financial institution that is ready to give loan to the company for meeting the purpose of growth, expansion, diversification. There could be many reasons for what they need a loan. So the third points come out is it raises money for growth and expansion and diversification. The company can raise money for a growth and diversification in other fields. Like growth means the company can grow larger and larger, and it can diversify in other product. Like it can diversify when it was selling a single product. By raising the money, it can diversify into third product, fourth product, and many other products. Fourth point come out, it increase exposure, prestige, and public image of the company. Public image of the company is enhanced. Like the public give more trust to the public limited company compared to the privately held company. What is the history of the IPO? So the first IPO was launched in March 1602 when the Dutch East India Company offered the share. So the history of IPO is from 1602 when the Dutch India Company raised in IPO. So how is the shares in IPO allotted? There are three categories at which the shares will be allotted. Number one stands for qualified institutional buyer. Second is non-institutional investors, and the third is retail individual investors. So we fall mostly in the retail individual category. This is mostly for investing. Individual investors can invest through this third option, that is retail individual investor. So there are different percentage on which the shares will be issued. Okay, the next questions comes out is tips and strategy to invest in an IPO. So what are the tips and strategies to be taken into consideration while investing in an IPO? So The first point is check the performance of the company. So we need to check the performance, the past performance of the company, how it has been performing before an IPO and how it would be performing after an IPO. So we need to check the history of the company, that is the background, what are the pros and cons, and what are the disadvantage and advantage, and what are the opportunity available ahead after the company comes with an IPO. Second point is how the money is going to be utilized. For what reason the company is raising an IPO, and what is the main reason behind the IPO. That is it for the working capital requirement? Is it for the growth and diversification? Is it wanted to gain the credibility? There could be many reasons. So for what reason, we need to find out for what reason the company is raising an IPO. Third point is, this is the most important point, check the background of the promoter. Promoter are the person who has raised the company from small to big. So we should check the background of the promoter, whether they have a clean track record of performance in the past, and whether they are functioning in a proper manner as they would have performed, whether they have compliance to all the rules and regulations that are available in the company act, as well as many other law that is affecting the company. So we need to check the background of the promoter. And the last points come out, we need to fill the application form carefully to get a chance in an IPO and get an allotment status. So we need to check an IPO. While investing in IPO, we need to check all our details are filled correctly, and whether and there is no any mismatch. So we need to check how we need to check all the application form filled by us, is it correct or not. So the next question is, what is the performance of an IPO when the shares is listed in the stock exchange? So there could be many reasons why the shares is performing downgrade, or why it is performing upgrade, means why it is going more higher and why it is coming down. So there could be reason. First reasons comes out is lockup period. Lockup period means there is a lock-in period for the promoter who has invested money in an IPO. So after the lock-in period is over, the promoter will take out the money from an IPO. So for that reason, there could be a little there would be little downgrade, means the share price will go down compared to as it has gone higher. So when the promoters take out the money, so the share price will go down as the lock-in period gets over of the promoter. So when the promoter invests money, there is a lock-in period depending on the years. There could be 3 years, 1 year, depending on the requirement. Flipping. The other point is flipping. Flipping is very important. When the shares doesn't function like it is discounted on the day of listing, and after that there is a chances of gaining a profit. So there is a chances of gaining a profit. So the person interested buy the share when the shares is discounted at a lower price, and after some days, after some months, they sell back the shares when the shares go higher. So when the shares is discounted, there will be many buyer available to buy the option. For that reason, the share price goes high after the shares is listed at the discounts. And the last reasons come out. There will be more reason, but the last reasons come out here is listing gain. Mostly the investors who are invested not on long term but on short term money, so they invest mostly for the listing gain. After the shares are listed in the recognized stock exchange, on the day of the listing, they would come out by selling all the shares. For that reason, as there would be many sell option, many investors will be selling, so for that reason the share price of an IPO would go little bit down compared to how at price it has been listed. After few days it would decrease. So now let's check out what is the process of an IPO when the IPO is issued by a book building process. So first, here is the chart of how an IPO is issued as a big building process. First is the decision to go for an IPO. The company comes up with a decision to go an IPO. It appointment of BRLM and legal counsel. What is BRLM? BRLM mostly stands for Book Running Lead Manager. So what's the function of BRLM in an IPO? So let's check it out. Lead manager are independent financial institution appointed by a company going public. Company appoint more than one lead manager to manage a big IPO. They are known as book running lead manager. The main responsibility is to initiate an IPO processing and help the company to roadshow and creating an offer document and get it approval from the SEBI of the stock exchange, and helping the company to list the shares successfully in the stock market. So mostly BRLM, book running lead manager function, is to get an approval from the SEBI. It function as it prepare all the paperwork for the company, and it help the company to list successfully in the stock market on the day of listing. So it actually shows a roadmap for the company for how to get a successful listing. So the next is due diligence, means it need to file all the paper correctly. After that, drafting a red herring prospectus. It need to draft a red herring prospectus with a SEBI. So what is a red herring prospectus? A red herring prospectus is a preliminary prospectus filed by the company with the Security Exchange Board of India, usually in connection with IPO, initial public offer. A red herring prospectus contain most detail, like it is simply like a prospectus that is issued by any college or institution before we get admission. So red herring prospectus is about all the detail of the company that is doing in the past, as well as what we will be doing in the future. So the red herring prospectus contain all the financial information as well as the management information, as well as many other information as is functioning, what is his main role and responsibility, what type of operation is dealing, what type of product it is manufacturing. Many other detail would be included in a red herring prospectus, but it does not include the key detail of security issued, such as its price and the number of shareholders. So this is mostly as book building. So book building, there is a price range. So in the price range, the shares for filing a red herring prospectus, we can't denote the price at which the shares, that is future, will be depend on how the company, how much share it has been allotted. Is it oversubscribed, undersubscribed, what price it is trying to issue. So this feature cannot be included in the red herring prospectus. That is, the price and number of shares are issued. So this content is not available in the red herring prospectus. It is after the shares are oversubscribed or undersubscribed, the company with a BRLM approved the price at which the shares they are trying to list in the stock market. After drafting the red herring prospectus, there is filing with the SEBI and stock exchange, that is with Security Exchange Board of India and stock exchange, mostly NSE and BSE. Then after that, pre-market opening, means it will start trading in the pre-market session. If the paperwork are correct, it gets a clearance from SEBI and ROC. Then after that, BRO shows the roadmap, that is book building process. Mostly this process is about how the shares are issued by book building. Then after that, the last point, pricing and allocation, means mostly the price is fixed at this point, that is pricing at which the shares the company will be issuing, as well as the allocation, means when it is oversubscribed, we cannot allot to many person as we want. So as depending on the capital requirement, at how much capital we want through an IPO, depending on that, the allocation will be done. After that, the points come out is ROC filing and prospectus, means ROC mostly stands for registrar of company, that is a company registrar. So with that, we need to file all the documents, as well as in this document the price as well as the quantity of shares will be denoted, including the detail which is included in red herring prospectus, that is detail of the company in the past as well as future. So this detail will be containing of the price as well as the quantity at which the shares the company want to list through an IPO. And the last is the listing date. The listing date at which the company wants to list the shares mostly depend on a group meeting of the BLRM and the many other technical person that is available, that at which date they want to list the shares in the in the stock market, mostly in the share market. After that, the last point is fund transfer to the issuer, means mostly stand for the person who has applied for the share, but they are not allotted but they are not allotted any quantity. For that, for them the initiation of refund starts after the listing. After the allotment is done, after that the funds are transferred to the issuer bank account through which they had applied to an IPO. So I would be concluding this video by showing a chart that is physically present in the stock market, that is the successful IPO that has been listed in the past season. So by seeing this, we will judge whether to invest in an IPO or not to invest in an IPO. So let's check it out here. So the first the first row stands for, and the first column is date, the second is IPO name, that is the third is issue price, and the fourth is listing open, the day on which the listing open, and the day on which the listing closes, means when the stock market are closed, the listing gain percentage. This is most important, we need to check out on this. And CMP mostly stand for current market price, at which price it has been dealing in the current market price, and current market price percent. This also is most important. So let's check it out. One of the most successful IPO, that is just check it out, our recent IPO, that is Indigo Paint, that has been issued on 2nd February to 2021. The issue price of it was 1490, but the listing price was 2607.50 paisa, and the listing closes or closing price was 3118.65. And the mere, we need to carefully look at the listing gain percentage. It is 109.31% times above than the price at which it was issued. So for example, let's see, check it out. For example, the issue price of it was 1490, and the listing closing date was 3018.25. So the price raised above by 1628.65 paisa. So this is lot of amount, because we are getting a listing gain percentage of 109.31%. That's more than, and currently it is been trading at 70.65% of listing gain compared to the issue price. If you have bought the IPO on the issue date, that is IPO, so the current percentage of gain we will be getting on that is 70.65. This IPO is raised only on February. Okay, let's check out the IPO which has not performed well in while during the listing date. So we just check it out. The 7 point, that is that the IRFC IPO that was issued on 29 January 2021. The issue price was 26 and the listing open at 25. That is 1 rupee lower than compared to the price at which it was issued. Listing closes at 24.85 paisa. We are getting a listing loss of minus negative, that is 4.42%, but there's a current market price 25, and we are getting till now the current market price percentage is 3.85%. So why this? Actually depend on the company prospectus, whether depend on the company business, how it's going to behave after an IPO. So mostly for that reason, the company, if the company valuation as well as many other reasons that affect the company on the listing day, for that we can get the shares listed at discount, not at premium. So but there are many shares, most if you compare the percentage, we will be getting a ratio of 0.01% of shares that are listed at a discount, and 99.99% share that are listed at a premium, that is above the price. So at lastly, I would like to conclude whether it is good to invest in an IPO or not. Mostly it depends on whether to invest in an IPO is people invest in an IPO because of the volatile price movement on the day of the trading as well as the day after. So there will be the percentage of increase will not be normal, it will be abnormal. As we have seen in the case of Indigo Paint, it has raised at 109.31%. It is an abnormal run ahead. So people invest mostly in an IPO to get a listing gain. Even we can invest in a long run prospect, because we are buying at the shares at which price it is issued first. So we are buying at a lower circuit. So there's lot of chances that it will hit upper circuit in the coming near months. So it is always advisable to buy the shares in an IPO. Depending on after looking at the company prospectus as what it is doing and what it would be doing ahead, and what is mostly the product it would be dealing, as well as we need to have a look at the financial circumstances, as well as the risks that the company is facing, as well as the opportunity that is available to the company in the coming future. So whether it is advisable or not to invest in an IPO, the answer is yes, it is advisable, but taking into consideration all the pros and cons that are available with the individual company. There may be depending from company to company, there are pros and cons that relate to different types of aspects. So after taking into consideration, we need to take a decision whether to invest or not in an IPO. That's all for now. Hope you understand the concept of how an IPO function and whether it is advisable or not advisable to invest in an IPO. Do feel free to write any question or any suggestion or any feedback in the comment section available below. Do like this video and do hit the subscribe button and do subscribe to my channel. Thank you for watching. Bye bye.